Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about a latest development in terms of the Russian seizure of overseas assets. Now, if you've been following the channel, you'll be aware that at the time of Russia's invasion of Ukraine, Russia had around $300 billion worth of assets located overseas. And a lot of those assets were cash that were basically sitting in bank accounts in various countries that Russia was doing business with. And because of the invasion, those assets have been seized and Russia no longer has any access to them. And there are ongoing discussions right now with the European Union and the US and the UK about what to do with those assets. The UK and the US are both saying that those assets should be seized and given over to Ukraine to support their defence against Russia. However, the European Union is taking a more conservative approach and saying that only the interest that's being generated by those assets can be used to support Ukraine. But nothing categorical has been decided yet. Anyway, the issue is that President Putin in Russia is very upset about the loss of this $300 billion worth of assets. And in retaliation, over the last 2 years, we have seen a variety of assets that were owned by overseas companies in Russia being seized by the Russian state, effectively being nationalised, and those assets have been lost. And it was recently estimated that the total losses incurred by Western companies so far in Russia amount to more than $107 billion. So obviously that's not 300 billion, but it's going some way to offsetting those lost assets. And today I want to talk to you about a really interesting new development that's happened with regards to shares that have been issued by Russian companies that are being held by foreign nationals. Now, as a result of the sanctions that were put in place immediately following Russia's invasion, those shares have been suspended in terms of being able to sell them. So foreign nationals can't cash in their investments in Russian businesses, so they're basically in limbo. You can't get your cash out, and we don't really know when that situation will ever change. So if you're currently sitting on shares in Russian companies, those shares are frozen in exactly the same way as the Russian assets are. However, 2 Russian companies have changed that situation, and they've instructed share buybacks. And these 2 businesses are Magnet, one of the largest food retailers in Russia, and MTS, the largest mobile phone operator. And you might be sitting there thinking, well, that sounds like good news. If those companies are buying those shares back, then that represents a bonus for all the overseas shareholders. But the devil is in the detail in all of these deals. And what we're seeing is that these Russian companies are buying back huge volumes of shares at a massive discount. And that's actually hugely advantageous for those businesses. So in today's video, we'll go through the details of these share buyback deals that have been announced by MTS and Magnet. And we'll talk about why they're beneficial to the Russian businesses and detrimental to the overseas shareholders. The amount of value that's being attributed to these deals is absolutely huge from the Russian company's point of view. We'll also have a look at which companies have lost the most money in terms of the loss of their overseas assets in Russia so far. And then finally today, I'll wrap up with my summary. So what I think the implications of these latest share buyback deals are, and whether or not we're likely to see a whole lot more of them happening over the course of the next 3 to 6 months. But before we get into all of that, I'd like to say thank you so much to everyone that's supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks recently, thank you so much for the time and effort you've taken to do that. I really, really appreciate it. And if you're a long-term supporter of the channel, either through Patreon or Buy Me a Coffee membership or YouTube membership, thank you for that long-term support. Really helps to keep me motivated, keeps me thinking up more titles for videos to post on a regular basis. So thank you. When a private company decides that it wants to go public onto the stock markets, it will sell an agreed number of shares in an initial public offering to investors who buy those shares, and then they become shareholders. And those shares are listed on exchanges all around the world. So it could be the NASDAQ or the New York Stock Exchange or the London Stock Exchange or the Russian Stock Exchange based in Moscow. And if you buy those shares and want to sell them, in the good old days, you would have needed to have contacted your stockbroker and arranged for that stock to be sold. However, these days, most things are done on apps, on phones, so you can buy and sell shares at the push of a button within seconds. However, since Russia's invasion of Ukraine, all of the Russian businesses that are listed both in Russia and overseas have had their shares suspended in terms of trading. So if you're sitting holding shares in a Russian business, you can't do anything with them. They're basically frozen. But two companies in Russia have recently announced share buybacks. And a share buyback is a situation where a company generally has a surplus amount of cash that it doesn't know what to do with. And rather than investing into more business opportunities, that company decides that it's going to use that cash to buy shares back from shareholders, usually at some sort of discount to the current share price. And generally speaking, after the share buyback completes, the share price goes up and it should increase the overall value of the business. That's the main reason why companies operate share buybacks. However, the two Russian businesses that have recently announced share buybacks, MTS and Magnet, are basically doing this because they want to take out overseas shareholders. So let's have a look at the details of the share buybacks that these companies have announced. In September 2023, Magnet, which is one of the largest food retailers in Russia with more than 28,000 stores, announced that it had completed a share buyback from overseas shareholders of just under 22 million shares, valued at 2,215 rubles each, which is around $25, in a transaction that totaled $507 million. And in November 2023, the company announced that it had purchased a further 8 million shares from overseas shareholders, taking the total value of the share buybacks to $736 million. Immediately following the completion of the share buyback, Magnet shares were trading at more than 6,200 rubles each, meaning that the share buybacks had been completed at a discount of more than 65%, which is above the 50% threshold that President Putin set in the middle of 2023 for the purchase of all overseas assets. On the 27th of April 2024, MTS, which is Russia's largest mobile phone operator, announced that it was launching a share buyback scheme for around 84 million shares, priced at 95 rubles per share, which represents a discount of 69% against the share's closing price the day before the offer was announced. Now, as I mentioned at the start of today's video, the main driver in normal circumstances to call a share buyback is where a company has a surplus amount of cash and can't think of anything to do with it. It can't think of any business investments, and so it buys back shares from shareholders to reduce the number of shares in issue and therefore increase the share price. However, the situation in Russia at the moment is very different to those circumstances. Basically, what we've got is an environment whereby President Putin has issued a decree stating that any assets that are bought from overseas companies and investors have to be made at a discount of at least 50%. So this represents good business if you're a Russian company, because you know that you're getting something that's worth at least double what you're paying for it. And in the circumstances of a share buyback, the situation is actually much better than that from the Russian company's perspective. As we've just discussed, the share discounts that both of these companies have announced are 65% and 69%. So what that means is that these companies are only paying around 1/3 of the value for these shares. Now, you might be sitting there thinking, well, hang on a minute, you said that these shares were frozen. So why would these companies be incentivized to buy them back? Surely they can just leave those investors in limbo. They can't sell their shares. They can't do anything with them. But actually, from the company's point of view, it is far more advantageous to buy those shares and cancel them. So let's talk about why share buybacks can be hugely advantageous for companies, and also why the people running those companies can benefit personally from the increase in the share price. So let's take a very simple example, and please note I said very simple here, so don't bother dropping me any messages below saying I'm a corporate finance expert who works at Goldman Sachs and this isn't how it works. I know it isn't, but I want to talk about a simple example. So let's say we've got a listed company with $1 million in cash on the balance sheet. That's all it owns. And that company has issued 1 million shares. And each of those shares are valued at $1 each. So we've got a very simple situation where the market capitalization of that business is $1 million. There are 1 million shares in issuance at $1 each, and the cash on the balance sheet is 1 million. So everything is nicely balanced. And let's say that I own 50% of that company and the shareholders own the other 50%. So my valuation is $500,000 and the investor's valuation is also $500,000 to get us to 1 million. So very simple so far. Now, if I decide that I'm going to buy back all of those shares from the shareholders, and for some reason I can persuade them to sell them for 50 cents each, so 50% of the value, which obviously is the situation in Russia at the moment. You're not actually allowed to pay more than 50% of the value. So I buy all of those shares back from the investors for $250,000 because they're worth $500,000, but I'm only paying 50%. So I pay out $250,000 to those investors. They give me their shares, so they're no longer involved in the company. So I own all the shares. And let's say I cancel all of those shares. I just write them all off and say I no longer want to have those shares. The company now has 500,000 shares, which are all the shares that I've always owned, but the cash in the bank is 750,000 because I originally had 1 million. I paid 250,000 of that to the investors to buy back their shares. So I've now got $750,000 in cash, but only 500,000 shares. So by definition, those shares will be worth $1.50 each. So my shareholding of 500,000 shares, which was previously worth $500,000, is now worth $750,000. So I've made a 50% gain on my shares, despite the fact that the company hasn't done anything. It's not trading. It hasn't improved its situation. All I've done is reduce the number of shares by buying them off those shareholders, cancelling them. And because I bought them at a 50% discount, the share price of the remaining shares rose by 50%. So I personally have won, and the company's share price has won. And the people who lost in that arrangement were the investors who had to sell at a 50% discount. And that's exactly the situation that's happening in Russia right now. The two deals that we just talked about for MTS and Magnet, those shareholders have sold at a 69% and 65% discount to the market value. So they were forced sellers. They really didn't have much choice. The only other option they had was to continue sitting on these zombie shares because they can't sell them. They're not being paid any dividends. It was dead money from their point of view. So they didn't really have many options in terms of what to do with those shares. But from the Russian company's point of view, because this law exists that was introduced last year, whereby you aren't allowed to pay more than 50% of the value for any overseas investments or assets, it represents a fantastic opportunity, firstly, to increase your share price because you're reducing the number of shares in issuance, but also to potentially increase your personal wealth because all of the people who are running these companies will be given shares. They may have bought some shares, but as part of your package, your employee deal, you'll be given shares each year. And so the value of those shares will go up in line with the general price. So this is a great opportunity for all of these Russian people who are running these Russian businesses to increase the share price, both for Russian nationals, but also for themselves. So what we've got here is another example of investors that have put money into Russia in the past, losing out as a result of Russia's invasion of Ukraine. So let's have a look at the companies that have incurred the biggest losses so far as a result of the sanctions. BP is the company that has incurred the single biggest loss as part of their full exit out of Russia and declared a write-down of $24 billion relating to its stakes in Rosneft and two other joint ventures in Russia. The company that's incurred the second biggest loss in the world is the French business Total Energies and has recorded impairment costs of $10.7 billion. Shell, which is the world's largest trader of liquefied natural gas, and had been involved in a joint venture facility on the island of Sakhalin with Russia, have written off $5 billion of investment as a result of their decision to fully exit from Russia. ExxonMobil, the giant US oil business, was one of the first to develop a joint venture in Russia and has disclosed a $3.4 billion write-down relating to its full exit from the country. German energy business Uniper owned and operated 5 power plants in Russia, and despite the fact that Germany is at the forefront of the sanctions against Russia, the company continued to operate these plants until President Putin issued a decree seizing all of the assets for the Russian state, and as a result of this, Uniper incurred a write-off of $5 billion. Finnish energy business Fortum owned and operated 7 thermal power plants in Russia, as well as a variety of wind and solar plants. The company was in the process of organising a controlled exit by selling these operations to a Russian business. However, this sale process was upended when President Putin issued a decree seizing control of all of the assets, and as a result of this, Fortum incurred a write-off of $2 billion. OMV, the Austrian energy business, has taken a €2 billion hit on its decision to exit. The Norwegian business Equinor has shut all its facilities, incurring a loss of $1.1 billion, and Enel, the Italian utility business, sold its 56% stake in Enel Russia for around €137 million, incurring a loss of €1.3 billion. The French bank Société Générale had the largest exposure as a result of its ownership of Russian bank Rosbank. Directly following Russia's invasion of Ukraine, SocGen started the process of selling this stake, and it was sold to a Russian oligarch, and SocGen incurred a loss of €3.2 billion on the deal. Italian bank Unicredit had the second largest exposure to the Russian market, and so far has booked a €1.3 billion loss relating to all of the loans that it currently has out to Russian companies and individuals. French bank Crédit Agricole had the third largest exposure and has taken a hit of €500 million. Austrian bank RECESSION International had a variety of branches and so far has taken a hit of €301 million. Italian insurer Generali also had large exposure and so far has taken a hit of €138 million. American bank Citigroup had developed a commercial and consumer banking business in Russia over the course of the last 20 years and so far has incurred charges of $170 million relating to that exposure. And Swiss banking giant UBS has so far written off $100 million and so far has reduced its loan exposure from $600 million to $400 million. Over the last 20 years or so, McDonald's have built an extensive network of stores in Russia. However, McDonald's has taken the decision to exit entirely from Russia and has sold all of its stores to a Russian business who's had to rebrand it and is not allowed to use the McDonald's name. And as part of that deal, McDonald's have incurred a loss of $1.4 billion. AB InBev, the large Belgian brewer, had a non-controlling stake in a Russian joint venture and has written off $1.1 billion as part of its exit. Carlsberg, the Danish brewer, had 8 breweries and 8,400 employees in Russia and was in the process of selling this to a Russian business when President Putin issued a decree seizing all of the assets from the company for no value. And as a result of this action, Carlsberg incurred a write-off of $1.4 billion. Danone, the French food manufacturer, which had an extensive dairy products business and also an infant milk business in Russia, was in the process of selling this to a Russian buyer when President Putin issued a decree seizing all of the assets for Russian ownership, and as a result of this, Danone incurred a write-off of $1 billion. Heineken, the world's second largest brewer, had 7 breweries and 1,800 employees in Russia, but sold these operations to a Russian business for a token value of €1, incurring a loss of $325 million. US tobacco giant Philip Morris has discontinued sales of a number of Marlboro and Parliament cigarette products in Russia and has taken a hit of over $1 billion. Henkel, the makers of a number of consumer products, including Persil washing detergent and Pritt glue, has also incurred a write-off of €1 billion as part of its exit from the country. French car maker Renault had set up its own facilities in Russia and also had a majority stake in Russia's biggest car maker AutoVAZ. As a result of the invasion of Ukraine, Renault has now exited from the country and sold its stake in AutoVAZ for €1 ruble, incurring a loss of €867 million in the year. Nissan, the Japanese car company, had also set up facilities in Russia. However, they have now sold this for €1 to a Russian state-owned entity, incurring a loss of $687 million. Volkswagen, the German car business, had set up a truck division under its Traton brand and have now disposed of this, incurring a loss of €550 million. Volvo, the Swedish car manufacturer, had a factory in the southeast of Moscow that produced around 3,000 vehicles annually. And when this was sold to a Russian business, the company wrote down the full amount of its investment of around $860 million. Ford had a 49% stake in the Russian-based Solarz Ford joint venture, which in 2021 sold around 20,000 vehicles in Russia. However, the stake has now been sold in Russia and Ford have fully exited the market, taking a $122 million write-down. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happened with MTS and Magnet with regards to their share buyback programs is really interesting, because at face value, when you see a headline like that in the media, it actually looks like positive news for the overseas investors. They've actually been given the opportunity to sell their shares, which from their point of view obviously unlocks some frozen assets. But when you dive into the detail and look at what's going on here, the law that was passed by President Putin in 2023, restricting the value of any overseas assets or investments to 50% of their market value, means that that represents a great buying opportunity from those companies' perspective. Now, up until this stage, we've talked about nationalisation of assets. So we had situations where power stations have been nationalised and other assets that Russia decided that they needed to keep for their general security. But that's a nationalisation issue. That isn't a private or public company. That's where the Russian state is saying, we'll have those assets, thank you very much. But what we're talking about in today's video are public and private companies in Russia now finding a way of being able to benefit as a result of these rules that were brought in last year. And whilst your initial reaction to news of the share buybacks might have been positive, you might have saw that as something that was good news for those investors, obviously when you take a step back and think about what the overall economics look like, it's bad news because those investors are losing a serious amount of money. Their investments have probably reduced anyway from when they made their first investment because Russia is no longer as attractive a market. It's contracted significantly because of the sanctions. But because of the massive discounts that are being applied against those share buybacks, obviously the bottom line will be negative from all of those investors' perspective. But from Russia's point of view, this represents a great opportunity. And I think over the course of the next 6 to 12 months, it's likely that we will see more Russian businesses buying back shares at a massive discount and then cancelling them to drive up their own share price, which will help their investors. But also the people who are running those companies will benefit because they're sitting on large portfolios of shares themselves. And as we saw from the detailed breakdown of the company losses, over $107 billion worth of value has been lost so far with regards to assets that were owned by overseas companies. And over the course of the next 6 to 12 months, it's likely that that figure will continue rising, particularly as more and more Russian companies take the opportunity to undertake share buybacks, to buy those shares back, cancel them and drive up their own share price. So the overall summary of today's video is that whilst Russia may have $300 billion worth of assets overseas that have been locked up and they no longer have any access to them, Russia is slowly trying to recoup that figure by seizing assets and investments that were made by overseas companies into Russia. And over the course of the next 6 to 12 months, it's likely that we will see those seizures increasing. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you liked what I said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.